rather than take you through Jungle Ventures and what we do, I thought it may be a little bit more interesting to take you through the venture capital ecosystem and give you an update on what's been happening. 2015 was really a step change for the industry. I think that before that, 2012, the industry fundamentally changed, mainly off the back of the Singapore government and some of the leverage programs that they created, which spawned several venture capital funds. And off the back of that, 2015 was really a time where those funds that were created in 2012 then started to raise their second funds, and also new funds came into the market. And so there's been a lot more capital that's come in 2 or 3 years ago, 4 years ago, before. Mainly people were talking about a Series A crunch and the inability to go from seed capital to Series A. I think as Nick highlighted in his keynote, I think that's now becoming a Series B crunch. But I thought it'd be interesting to give you, my perspective and some insights on the region. And I've been covering the region for about 17 years. I spent 12 years at Yahoo doing M&A, went to TPG Capital, focused within the growth fund, focused on internet investing, and now managing partner at Jungle. I think in all of that time, right now is probably the most exciting time to be building businesses in this part of the world. The three main reasons for that is, and as I'll show, continued growth of new users is incredible. Capital, like I said, is becoming more accessible, and there is a very large differentiated problem set that's facing consumers and businesses in this part of the world, where the solutions to many of those problems are going to come from local companies. Those solutions are not going to come from the Valley or from China or from India. Now, as everybody knows that works in this space, data and insights research has been tremendously hard to get in this part of the world. And so I pulled a couple of slides from a study that Google and Temasek did. They presented the slides about 2 weeks ago in Singapore, but I think it highlights some of the points that I wanted to make. The first is really around user growth. And so as big and as diverse as the countries are in Southeast Asia, there's a tremendous amount of growth that's still in front of us. So if you think about it, 124,000 new users are coming online every day. That equates to just under 4 million new users a month. And so if you put that in the context of the United States has about 280 million users online. So just a little bit more than where we are today. They're adding about 3 million new users a year. And so Southeast Asia is adding as many new users a month as the US is adding in a year. So that's 124,000 people that haven't used the internet before. They don't know which is the best home delivery on-demand food service. They don't know which is the best health app that's out there. So these are all consumer decisions that are going to be made in the future, which I think is a huge opportunity. The region as a whole will be the fastest growing region all the way through 2020. Indonesia alone will be the fastest growing market in the world. Indonesia will add 123 million new users to the internet, mainly via mobile devices and smartphones, which is about 40% of the size of the entire US market today, which I think is incredible, and is an incredible opportunity for businesses in this part of the world. In order to really feed that ecosystem, and I completely agree with Nick's point in terms of the amount of capital that's required in order to fund a lot of these businesses as they grow, as well as the total addressable equity value that's going to get created over the next 5 years in the region. But in order to do that, you really need to have exits, because all investors in private equity and venture capital really are looking for distributions. And if you actually compare Southeast Asia to China and India, so Southeast Asia is always thought of as maybe a smaller market versus China and India. But what we did is we actually looked at the top 8 Indian metros and compared them to the top 9 cities in Southeast Asia. So most startups today tend to be megacity focused. So even though they may be a regional business or a country business, most of them are focused on the top cities in Southeast Asia. And actually, if you add in the total population, it's actually quite similar to India, the major metros, so about 93 million versus 75 million. But actually, if you look at it on a GDP per capita, and this is around discretionary dollar spend, And at the Google Temasek event that they had, Joe Tsai, he was the former CFO, he's now the executive director of Alibaba, spoke. And he made an interesting insight with regard to GDP per capita, and that as countries grow past a $4,000 mark, that's where you start to see a lot more discretionary dollar spend. So as GDP per capita surpasses 4,000 and grows past that, you have a lot more consumers that have discretionary spend that they can start engaging in e-commerce, they can start buying and transacting, and that's where you see a lot of the rapid growth. And if you actually look back at the Chinese market and when GDP crossed the $4,000 mark and the growth that happened through e-commerce, and you apply that back, Indonesia, for example, GDP per capita is about 3,500. It's expected to cross 4,000 sometime over the next 18 months. And so you can predict that there's going to be a lot more growth behind that. So again, as we compare ourselves to the larger markets, I think there's a huge opportunity. And like I said about distributions, back to investors, we've seen a lot more M&A activity. And so in this part of the world, there's been a few tech IPOs. I think there's about 8 or 9 there. Ketcha Group makes up about half of those, mainly on the ASX. But if you look at the M&A activity, and this is not a complete list, this is just to make a point, but it's actually been accelerating. And I think this is the thing that most limited partners want to see as they think about investing in venture capital and private equity, is they want to see a path to liquidity. And so within Jungle, for example, we've had 3 exits in 3 years. All companies have been acquired by marquee NASDAQ, or at least publicly listed large tech players. And going forward, I think you're going to see a mix of trade sales. I think the region is homogeneous in a lot of ways in terms of what people are doing across markets, but it's also very complex. And so whilst it can be viewed as a whole region, each market is going to be quite individual. And so I think a lot of the M&A transactions are driven off the fact that companies want to buy their way into all of the markets and not just one of the markets. And so I think as you look forward, I think there's going to be a lot more M&A activity in this part of the world. I think we can probably expect to see more of that coming out of China, as a lot of the Chinese tech players start to be more inquisitive about geographic expansion and will use acquisition as a means to do that. I also think that the ASX, SGX, Hong Kong, and even NASDAQ for a few companies are going to be quite an interesting path to liquidity. In terms of the landscape, and again, not a complete view, but again, indicative and kind of proves the point, that there's a tremendous amount of activity that's happening around the region, both at the seed and the Series A stage. And then if you think back over the last 10 years, corporate venture has always been over-indexed in this part of the world. I remember talking to a founder about 5 years ago and said, if you could get capital from anybody, who would you get it from? And the reply that I got back was mainly corporate venture capital firms. And the reason for that is that there just wasn't large venture firms that had established themselves. But again, more at the top end of the capital structure in the Series B and in the growth rounds, there's just not a lot of activity. But again, I think as these firms start to grow and expand and show results and show distributions going back to investors, I think we should expect to see more activity happening in the future. Investment in the region, certainly been a slowdown in the US in terms of venture capital. There certainly has been a slowdown. This is Q1 2015 compared to Q1 2016 in China, which is down 28%, India, which is down 17%. But actually, Indonesia and Singapore are the 2 largest markets in terms of venture capital investment spend. Both increased 4x in Singapore, 2x in Indonesia year on year. It's worth noting that Malaysia, Vietnam, Philippines, and Thailand all seeing increases year on year. So whilst there's an overall slowdown in the market, we're still not feeling it in this part of the world. Again, this is another slide. This is actually from the SVGA. And this only captures institutional investors. So anything that's not an institutional investor, there's a lot of family offices that are investing, corporate VCs. But from an institutional investor, you can see the growth of investments going from 44 deals in 2010 up to over 300 deals. Again, as kind of Nick highlighted, the majority of the capital getting deployed is actually going to a few number of companies. And so in 2015, Grab raised a $350 million round. Q10 raised a 82. It's more than a third of the capital that was invested in Southeast Asia tracked under this study only went to 2 players. But the interesting thing is that in 2015, the average investment was about 2.7 million per company. That's actually doubled now in 2016 to over 5 million. And so the pace of investments is increasing. The amount of dollars that are actually going in to fund these companies is also increasing, which is a great sign. In terms of where the companies currently are, it's a very, very competitive market in Southeast Asia for raising capital. Even though we've had over 20 new venture capital firms come online and close rounds, I think there's been about $1 billion that's been raised just over the last 12 months for investing in the Series A space. And that doesn't include proportions of larger funds like Sequoia, which are going to be allocated to Southeast Asia, or Excel, but they were also looking at deals in Southeast Asia. That's just Southeast Asia-based and focused funds. The majority of entrepreneurship that's happening is really Indonesia and Singapore. If you look at where the number of companies are in terms of their life cycle, obviously seed stage is getting it's the largest pool of companies. And then as they move through the A, B, C rounds, and then DEF, there's a handful of unicorns, Grab, Razor, Lazada, Garena, that have kind of made it all the way through the funnel. And if you look at it in terms of the funding by sector, e-commerce, mainly Zalora, Lazada, logistics, mainly Grab, have been taking the lion's share of the capital that's out there. But if you actually look at where the proportion of startups that are getting created now in 2016, actually lifestyle and e-commerce make up about 20% of the total new companies that are coming out. So a lot of volume coming through the system. Net new ads. So if you think about companies that have decided to shut down, as well as companies that are coming in, as well as existing companies, we think there's probably around 1,500 to 2,000 new companies, net new ads to startups in the region. And if you look at the initiatives that are now happening in Thailand, where they're being very supportive of the tech ecosystem, same with the government in Indonesia is also getting behind the tech ecosystem, we think this is a number that's going to continue to ramp. And again, I think the final point to make is that Southeast Asia is facing a lot of differentiated, unique problems in this market. But the opportunity, the kind of macro overlay around that is there's an enormous amount of growth. So in the Google Temasek study, they highlighted that the market was expected to reach about 200 billion by 2025, with the bulk of that really coming off the back of e-commerce. Advertising is also going to be a large market that's going to drive a lot of value. But some of the positive undercurrents, which I think Patrick highlighted, Nick also highlighted in his keynote, is very young population. We have a lot more senior executives that are now leaving businesses. So if you think about the cohort of founders that were funded in 2012, I would say the average age around the region was probably around 24, 25. I think if you look at most venture capital firms, the average age is probably up to maybe 32 or 33. You're seeing a lot more executives that have been working at Google or Facebook or one of the banks that are now spinning out. They have a little bit more experience behind them. They're hiring more experienced teams. Access to talent, I think, is becoming less of an issue, particularly in Singapore. And so just seeing a lot of change happening. GDP is also a positive undercurrent, but you also have detractors. So last mile delivery is still an inhibitor for a lot of growth. Fraud around the region is still affecting consumer confidence. But I think a lot of these problems will be addressed by startups coming up through the system today, who are hopefully finding it easier to raise capital if they're really addressing the large problems. So again, I think right now is the most exciting time to be building a business in this part of the world. I think the region has absolutely hit an inflection point. There's capital that's now supporting entrepreneurship. And so just one slide, self-promotion around Jungle. We're a Singapore-based $100 million fund, predominantly investing in Series A. Between Fund 1 and Fund 2, we have a little over 30 portfolio companies. We've also just announced a seed platform where it's being run by operating partners rather than investors, which is focused on real business building in the region. And that's also based in Singapore at Block 79. And Michael Smith, who runs that, is here today. Thank you very much.